Hi everyone and welcome to my weekly update with me, which is Fair Market Analyst at Tech Markets. This is my final weekly update of the year 2016. Got a little bit of a cold, so please forgive me for that. But certainly moving into the Christmas break, the dollar remains very strong, and that strength has been exacerbated by that Fed meeting that we had last week. The Fed came unexpectedly on the dot plot and pointed towards possibly 3 rate hikes now in 2017. Now, the Fed is certainly sort of banking on, I think, the Trump effect taking hold there, I think, in terms of the fiscal spending and the domestic economy starting to generate more growth, even though they didn't really do a great deal of updating on their growth forecasts or even their unemployment data. But certainly 3 rate hikes in 2017 is a possibility, although the Fed is a historically dovish organisation. And it seems to be that normally what we see is the Fed sort of underwhelming in their expectations there. But what we have seen is the dollar, which has grown or improved strongly in the last sort of movements into the weekend last week. It's a little bit of a consolidation play early on in this week. I think that's probably not to be unexpected considering it's the last week before Christmas. Probably a little bit of data out this week, which we do need to still look at. And certainly, I think the core durable goods, the final GDP growth data for the US and also the core PCE will be certainly watched by the markets, but not a huge amount to send us off into the new year. But certainly, I think we're going to be seeing what is the likelihood of more strength for the dollar going forward. And I think this little bit of a pause could be, again, just a little bit of a profit taking possibly, but a pause for breath before the next leg higher on the dollar. So what about your Forex markets? Well, you've got the euro dollar, which broke down below the massive support at 104.56 last week, and that was taking euro dollar to a new low dating back to 2003. Incredible moves that we've seen now. I think parity is certainly on the cards there for the euro dollar in the coming months as the dollar continues to strengthen. So any sort of rallies, I think, are a chance to sell. Big resistance band now, sort of between sort of 104.50, 105 area. I think that would be containing rallies. You wouldn't really see the bulls in control until 108.50 and above. And even then likely to still be sold into. In terms of cable, it's actually still ranging. Broke a little bit of an uptrend which had been forming over the last 5 weeks, but still I think it's in a bit of a range play. It's sort of held on to the support at 23.30. I think that was important, and it'll be interesting to see if it starts to sort of move lower. 20.80 is the key support there to watch out for if the dollar strength really does have a big impact on sterling. In terms of your dollar yen charts, I think you're looking out for a little bit of a correction near term. It tends to be around about 200 ticks of corrections when they do happen, so you could see a little bit further of a corrective move there, but certainly all the corrections of recent times have been bought into, and there's no real reason why 120 cannot be seen at some stage in the coming weeks. Also, we're looking out for possibility of big top patterns which are on the brink of completing on the Aussie and the Kiwi. Now, in terms of your equity markets, well, we've got the S&P 500, which has been consolidating really in the last week. I don't think that Fed meeting has done a great deal to help the S&P 500 because obviously if the Fed has increased its expectations for tightening without increasing its expectations on growth, which is according to its projections, then that's not all necessarily that great for equities. So I think that's possibly why we've seen the equity market stall a touch in the last week. And it'll be interesting to see if you see a bit of an end of the year correction. Now, you've had a strong run in the wake of Trump in the last few weeks. Will that start to sort of roll over a little bit into Christmas? In terms of your DAX chart, remains very strong. Having broken out, it's just continued to move high. It's actually now testing that November 2015 key resistance at 11.430. So will it again start to come under a little bit of profit taking? FTSE moved above 7,000 on Friday. Can it continue to hold above that level and test maybe even the 7,130 level? Not necessarily all that positive on FTSE at the moment. It still seems to be a bit of a laggard play, and I think the fact that sterling has been a bit of an outperformer on the currency wise, I think has not helped FTSE in recent weeks. In terms of your commodities, I We're looking at the precious metals, which remain under pressure, I think, from the strong dollar. Certainly gold has been under sort of downtrend conditions there in the last few weeks. Moving lower, I think, as the stronger dollar continues to take hold. I think if it breaks underneath 11.25, then I think we're looking at sort of 1100 and maybe even a full retracement back to 10,047. 1,047. So I think in terms of your oil price, again, the supply constraint that has been put into place by this OPEC production deal, I think has certainly helped the oil price, and a little bit of dollar strength has not is taken oil a little bit off the top, and there's some decent support bands coming in now, holding, and it's trying to push back towards the highs again. I think it's certainly possible now that we are moving into a new range of 50 to 60 bucks on the oil price. So it certainly seems to be a positive outlook at that at the moment. So for the rest of this week, it's mainly really focused on the US data that we got on Thursday. But before that, we've got the BOJ, which could be interesting on Tuesday. In terms of what they do there, it's unexpected to change in any way, but certainly the Treasury yield, the BOJ JGB yield differentials are interesting because they've moved only slightly since that Donald Trump victory, compared to around about 15 basis points, compared to sort of 60 odd basis points, 70 basis points on the Treasury yield. So that's why dollar yield has been driven higher so much. Will that start to turn around on the BOJ? Unlikely still though. I think the dollar data on Thursday, which is sort of going to be driven by the durable goods, the GDP, which is likely to be upgraded slightly to 3.3%, and also the core PCE, which again, core PCE is not expected to move for 1.7%. So you could see a bit of activity generally on the markets, but volatility could be interesting because you could low volume markets could have a part to play in a bit of spiky moves, but generally speaking, it tends to be a bit of a quiet week in the run up to Christmas, and that's possibly what we could see. So with that in mind, I wish you good luck for the rest of the year, and also Happy New Year to all my listeners. And I think that 2017 will be another year of high volatility, and I wish you good luck with your trading throughout it. So I wish you good luck, and I'll speak to you next time. Thank you.